All right, guys, we are live. Welcome back to another episode or live stream of the 0xResearch podcast. Today, we're joined by a friend of the pod, friend of the Telegram group, David Hoffman from Bankless. Thanks for coming on, David.
What's up, fam? Thanks for bringing me on.
Yep, 100%. And we've got Mark Arjun from the research team, and we're waiting on, of course, our trusty friend Boccaccio. He said, "Hey, Danny, I need a couple minutes. I really wanted to mog you at the start of the stream, so I'll show up a few minutes late with a couple of racks in hand." And that was that. So awesome. How are we feeling today, guys? I guess something that I'm sure maybe we don't have the deepest takes on. I don't know, David, you mentioned maybe you're a geopolitical expert, but
Totally.
as I'm sure everyone on the timeline is now, but obviously talk of the town that I think we kind of need to mention before we go anywhere is this Israel-Iran conflict. There was a little bit of a market reaction last night going into this morning.
So muted, very muted reaction.
Yeah, I'm curious, do we have any broad thoughts there? I mean, for me personally, I don't typically make any investment decisions following
based
global
off
conflict.
Of missiles. Yeah.
Yeah. But I don't know. Does this change the vibes for anyone?
The nothing ever happens memes were going around as if something finally happened. They're now the memes that something finally happened. So the nothing ever happened meme guy lost. But if you look at the market prices, I think the nothing ever happened guy is winning. We have dumped way harder for no reasons before, compared to this. So I'm kind of in the camp of the market is saying nothing happened.
Yeah, I'm kind of agree with that. But even though it was still kind of a big move for Bitcoin in recent volatility, I'm a little bit ahead of you guys in the UK. So the conflict happened at 2 a.m. I woke up this morning and I saw Bitcoin at 102. And I'm like, what happened? It was pushing all-time highs. And my first thought was, oh, who bombed who? And then I was disappointingly unsurprised to see the conflict. But this always happens with Bitcoin. Any major geopolitical event, Bitcoin pulls back unless it's a financial geopolitical event, and then Bitcoin is yay. So I'm kind of unsurprised at this whole thing.
Yeah, and even I think all events cause Bitcoin to sell off. It just it generally rallies pretty soon thereafter if it was a financial related event. People got to pay back debts, people are getting liquidated, so people are selling Bitcoin. But then the next day reality sets in, and then whatever financial related event happens, people are oh, well, this makes me more bullish Bitcoin.
Yeah, I do feel especially with the price action, in the short term, you get a lot of the tweets from people who are so it's not a hedge. It's not, it's not a hedge against things like this. And it's sure, maybe not in the absolute moment when perhaps people consider risk off and they just sell, they just hit the button, or the algos just hit the button when the news feed comes across the, through the ticker or whatever. But the longer term question is always up in the air. But I do think it's funny that that gets brought up immediately, almost any time initial news of something like this comes up.
Yeah, no, I totally agree.
The same thing happened with gold. If you look at gold, right as the news went on, it had a pullback. It's recovered now. But are you going to use that same argument for it not being a hedge? It's circumstantial.
Mm-hmm.
Yeah, I think that's totally fair. I don't have any other strong takes here. I can't tell you whether Israel and Iran will resolve this conflict in any specific time frame or what that will look like. But another conflict that was on the timeline yesterday was around valuation of ETH. I guess it's been on the timeline for a while. It's been a hot topic of debate, how to value assets. I'm going to pull up a relevant tweet. I think we got to talk about it, especially we've got co-host of the show on. But RSA, I guess your co-host, David, has been becoming something of the evangelist for ETH within the community, it seems.
Well, he always has been.
Yeah, but maybe being very much more pointed about it recently, right? There's been a strong push as of late. I think we can agree.
Well, so he took 3 months off. So he took a sabbatical, and then he came back kind of with a fervor around memeing ETH. And from the beginning of Bankless, we've always understood, I think our fifth episode ever was about memes and the power of memes. And we created Bankless like downstream of Anthony Pompliano and him like truly learning how to meme Bitcoin in a very compelling way. And like Ryan, I was watching Ryan learn from Anthony Pompliano and be like, I'm going to do that same thing for ETH. And that's what we started doing, is like we started like memeing ETH all the way back in 2019, 2020. And so that's always carried with us. And so he went on a break, he went on a sabbatical, came back and be like, you know what ETH needs even more of? Memes, bigger and better memes. And so like that's kind of like the background context that kind of like set Ryan up for this.
I don't want to cut off, but before we get into the topic, let's pull in Kevin, or maybe more people might know him as Intern, Growth at Monad. How you doing today, Kevin?
Doing great. Happy Friday.
Awesome. Wanted to pull you in before we get into this topic, but because I think it's relevant to you as well, we can all kind of share our thoughts here. But getting into the topic of comps and the valuation of ETH as an asset, it's been pretty hot lately, pretty divisive, I think we'd say. Let's pull up the tweet from RSA. Basically, he shared this tweet the other day. I'm going to crop out the visual and just show the text, but saying, let me show you the real comps for store value reserve assets like ETH, mentions gold at 85 trillion, oil at 85 trillion, gold at 22 trillion, bonds at 141 trillion, GDP at 106 trillion, M2 at 93 trillion, take the average, ETH 89 trillion. Simple math. ETH is going to 740K. That's the long-term potential. I do think, like, David, I think you set this up right in your framing here. Like, certainly there's some intentional memeing here, which personally I found GDP hilarious in this context. Right, but I'm just curious, like, what's everyone's raw takeaway here? What are our thoughts?
Let me go last on this one.
Yeah, I'll give it I saw this on Twitter. I saw it first via like the Mert screen cap, like this is my quant, which was an awesome take on it. I thought it was a great post. Like it's obviously playing on kind of like the TikTok XRP thing, which was like, well, Swift does 4 quadrillion. And so if XRP is Swift, then it's worth 4 quadrillion. It's just like, I think it's general crypto Twitter attention capture. All good jokes have like a kernel of truth in it, right? And I think the kernel in this case is ETH has so much potential, and like price has not been great this cycle, and it's underperformed to what people think. And just like kind of forcing people to think bigger, but also like playing into the meme of it. I thought it was a great tweet. I don't know. I am a shit poster respecter, so I thought it was good. It obviously captured a lot of attention. Yeah, I don't know. ETH. People forget about the vision of what Ethereum is supposed to be in its end state. And I think this kind of like forces it into the conversation.
Yeah, I'm gonna kind of agree there. I remember listening to one of the Bankless podcasts a few weeks ago when Ryan came back from a sabbatical and he was just like, we need more maxis in Ethereum. And he's also going to be, pushing out his voice there a little bit more. And I mean, this tweet is like encapsulates that pretty well. I do fall into the camp of ETH is money. I don't think it's good money, but I do think it is money. It checks those boxes. I'm from the Caribbean. I have a local currency, the Trinidad dollar. I don't think it's good money, but it is money, right? So, these things can be debated, but I think with that meme, the good news is after this Israel strike, oil is up, so ETH's average TAM has gone up with it as well. So that's positive.
Yeah, I think you guys are like totally understanding what Ryan's strategy here is. Like he's not just like naively tweeting out some $750,000 per ETH token. Like I can't really say to what degree of confidence Ryan actually thinks that is the real number for ETH. 750,000 per ETH seems a little absurd, but like the point is to be absurdist about it. And he'll probably also say like, haha, checkmate, everyone is talking about this. And so like win point for Ryan on this one. I'm not totally convinced that everyone talking about it is like unequivocally good, because it does like making something so absurdist. Like, yeah, everyone's talking about it. We are like memeing ETH to be comped to like a whole entire nation state economy. We are memeing ETH to be comped to oil. And where it's like elevating ETH to be in that conversation. And in that side, it's good. But also on the other side of things, like you are branding yourself as like somebody who's doing absurd things at the same time. And so like, it's also hard to take it seriously. And I don't know how to like weigh these things. Like for some people, it's very negative, but nonetheless, they are forced to talk about ETH being comped to the United States economy, which is like, has always been the maximum potential for ETH. Like it is unlike Bitcoin, which is just digital gold on the internet. Ethereum is an economy, and it has exposure to its own economy, just like all smart contract platforms. And so that's been the narrative that we've always tried to like meme into reality at Bankless. And like Brian is just doing this. Yeah. But like, I'm a little bit more moderate than he is these days, where I'm like, yeah, I see the costs of this memery as well. Because it does turn a lot of people off. It does turn like the John Charbonneau's types, that type of like thoroughly rigorous analysts. It does like make them look at this and be like, that doesn't make any sense. This person is absurd. And so like I'm kind of mixed about it.
Yeah, but let's look at the conversion rate, right? Like people like John Hobb, they're going to use REV, they're going to use DCF models. Like this isn't swaying them. This is going to sway a whole people who weren't investing in ETH or didn't want to invest in ETH. This isn't changing their mind necessarily. It's about, reaching the people who want, you want to compete to money. It's reaching those kind of people. I mean, like I talk to my normie, my normie crypto friends. When I ask them where's your rails going to be on, I get XRP. Everybody wants to invest in XRP. Where are the fundamentals there? Where's the reality there? I don't think it matters. But now XRP's price is so high. They're acquiring, market makers. They were in talks to acquire a Circle. Like they can fake it until they make it kind of avenue. So I think like things like this, I think is more like the conversion rate rather than what the downsides are, because I feel like ETH is probably one of the most hated assets this cycle, and like the people who weren't going to invest aren't going to invest anyway.
Yeah.
I think it's a courageous post though. Like whenever I see a tweet like that, I think about like it's sitting in the draft. You're like, do I hit send? Because like we've all been there. I don't know. I think that you're going to get dunked on left, right, and center by like any person who has a pulse and pays attention to crypto and crypto Twitter. But I liked it. Like the reason is kind of the first time that you actually learn about Ethereum. Like this is the thought that's kind of in your mind, right? You're like, what is the internet worth? Dollar terms, like maybe that's Ethereum if crypto takes over the world. So I think that's probably why it like hits more of a vein too, is because like everyone has kind of drank that Kool-Aid at some point, and then you kind of back out of it, right? Yeah. And then you take a more kind of rational John Charb type of view. It takes like every account has its own brand. Like some things, RSA could post that like Kobe couldn't post, or like someone who just does memes couldn't post. So I thought it was like pretty on target. It definitely pushes it more towards the shit poster side, but I don't think anyone would look at Ethereum this cycle and be like, there's way too much shit posting. Like that's just like not. I don't know. I think there's always room for more of that.
Yeah, I think that makes sense. I think maybe a question that the space would have is like, how many assets can you just like egregiously bull post to multi-trillion market caps on, on just like the hype alone? Maybe BTC can do that forever. Maybe even like, your Teslas and your GMEs can get their, they can get their pump every once in a while if you get enough people excited about it. But I think it does. There's maybe some pessimism here from the opposing side, and I see Tokes kind of brought this point up, but like to see this return to like absurdist price target posting when people have like real questions about, how are you scaling the chain? What are we doing with L2s? And like continuing to see, hey, we formed a new committee. Hey, we fired this person. We hired this person. We're going to do this. We're going to do that. But not seeing the results there. I think it just like, it opens up a lot of questions of like, so are we ignoring the real effort and just going to the absurdism? Because I don't know if that would give confidence to the I think you could bring confidence to the John Charbs of the world if the other half of that equation looked a little stronger.
This is something that Ryan and I have gone back and forth about a bunch, and kind of where our strategies have diverged recently. Like most of Bankless, we've been of the same mind about like what the right strategy is. And lately, like in 2025, again, he went on his like 3-month sabbatical and came back, and he's like, all right, I'm going to meme ETH even harder now. And my strategy has been a little bit more of towards like, you can't meme ETH on top of a weak foundation. And if you're going to be maximalist about an asset, but it's on top of a weak foundation, those maximalists end up looking like the XRP or Cardano or just like weird cult community types. And if you want the best form factor for like a maximalist of your asset, it needs to sit on top of a strong foundation. And so like you can like relate any sort of cult like community, like even the Bitcoiners. What a Bitcoin maximalist looks like depends on like the foundation that maximalist rests upon. And so the Bitcoin maximalist rests upon the Bitcoin fundamentals, like 21 million units, monetary policy, all this kind of stuff. And how Bitcoin is constructed is expressed by the flavor of maximalist that comes out on top of the platform. So Bitcoin maximalists are just downstream of the Bitcoin construction, and Ethereum maximalists are going to be downstream of the Ethereum construction. But the Ethereum construction, we understand, has like cracks in it that need to be addressed. And so my order of operations is like, I kind of think that just going straight for memeing ETH as like a $750,000 asset because it should be comped to the United States GDP is putting the cart before the horse, because we need to work on layer 1 execution. We need to work on base and native rollups. We need to integrate the rollups. We need to scale the layer 1. We need to work on UX. And then once these problems become like solved and feel good, that sets in a new foundation to be more maximalist about Ether the asset and the nature of Ether the asset that doesn't look like the Cardanos or the Ripples out there. And instead it looks like something much more healthy and much more inviting to skeptics. That would then like, okay, see this tweet of $750,000 per ETH and be like, what's really going on there? And then they pull open the hood, they pop open the hood, and they take a look at the internals. And if the internals of Ethereum are like solid and it's a strong foundation, then they're like, oh, okay, I see how that gets there. Whereas if it's still like memeing a $750,000 asset and you take a look under the blockchain, under the hood, and then like, we're still doing like OP stack rollups based on OP and grants incentives, then you're like, well, this doesn't make any sense, and I'm going to reject this. And so like my order of operations is like, first you have to build a strong product in order to be the best kind of maximalist out there. And if you do it any other order of operations, then it's like you're going to end up looking weird.
It reminds me a lot of kind of how Tesla was viewed in 2017. And I might get heat for this comparison, but the reason it reminds me of Tesla in 2017 is because at that I was full port Bitcoin, Ethereum, and Tesla. Those were the only assets that I held. I was also 19, so like whatever, like you can take more risk. But I remember all of my friends who were finance majors, or like all of the analysts that would try to break down stocks, like this is so overvalued, all the earnings. And in my mind, I'm like, guys, he's going to build the iPhone of cars, and like solar, like all of electricity will run on this, right? And so I think that, and eventually Elon ended up doing that, right? So it was like a bet on the execution to get to the point of like the TAM that had been expressed. So at any given point, like the price was not justified via whatever the rev in this case for crypto. But I think like Ryan's tweet in this, he's like explaining the TAM, right? Which is a fair thing to do. The meme is that he's saying there's 100% chance of reaching that TAM and saturating it. Like that is the joke. And I think probably where like it's polarizing is everyone kind of has a different, like you take the TAM and then discount it by the percent chance that you think it will actually execute to get to that point. And the debate around it at the core is like, will it achieve that? Like, what is the percent chance it gets there? And so on the ETH Maxi side, most people are like, it's almost a foregone conclusion, in which case the meme hits for them, where it's like, oh, well, this is the TAM, this is what it should be worth. On the people who have held ETH, and are maybe down 50% after holding it for like 4 or 5 years, they're like, this is never going to happen, right? Ethereum is not going to get here. And now all the people that are supposed to be the spokespeople are like joking about it. So I don't know. It's hard to justify. Like, it does take, you don't come into crypto if you don't have some kind of visionary predisposition. And I don't hate at all on trying to kind of realign the initial vision for it. Like, spitting out crazy TAMs, I like that. You can't say RSA is the first guy ever to do that. Right? Like, crypto is kind of built around that. So
yeah, he's just doing it on the most hated asset, and so it gets the most blowback. But I mean, there's a chance that if RSA was here, he would look us all straight in the eyes, not blink, and be like, "No, I'm fucking serious. Like $750,000 in ETH. I'm not joking. Like that's what it's going for. Ethereum is like a digital nation state in the clouds. The internet's going to be the world's largest economy. What do you think the money of that economy is going to be worth? It's going to be worth at least 700. There's a chance that he would just like not blink.
Yeah, I think you make some good points, Kevin. Like, I was having some similar thoughts on my run this morning about, like the Teslas of the world, where, traditional analysts are going to look at fundamentals for things and say like this valuation doesn't make sense. But we're also living in like a more retail participatory world today. And so you can just have obviously not every asset, it's just not possible, but there can be assets and there can be periods of time where like they just go to astronomical valuations and hold those for a long time because you have enough people who are saying, I actually don't care what the numbers tell me. Like I like Elon Musk or what have you, or I like Palantir and I just want to hold this stock at, 500p or whatever the number is. Right. So, you can certainly see that happening. As the valuation gets larger and larger, I think that, that naturally becomes more difficult. I think if we start talking about trillions, you might really need something there to convince enough money to actually like buy into the vision there. But I certainly think this is how we end up with meme coins as well, right? Doge can go to nearly 100 billion on just people believing that it will go higher and they'll just buy it now. So I see that as well. But yeah, I think on the, maybe not the Solana side, but maybe just the anti this take people, I do see there's like a split maybe here between like pragmatism and just like lofty idealism, perhaps. You've got like the, let's talk about revenue meta, type individuals versus like, let's just bull post our bags to the moon. And within this space, with how much retail kind of mindshare and narratives and things running up on to crazy numbers in short time periods, like I think it's natural that you're going to get like a little bit of both, and maybe the answer is like always somewhere in the middle, kind of.
I think that's right.
Cool. Well, let's we can call it on the ETH topic there. I think we don't need to fully turn, the bankless guys, we don't want to take their jobs. They have enough. They need to cover ETH full time. So
dude, even the Ethereum community is like, well, I mean, they want us to cover ETH more, but then also not how we do it. So like, we're not doing it the right way because we keep on inviting John Charbonneau on. And so like with our ETH coverage, just like in this weird spot of just like, there are some parts of the Ethereum community that I'm just don't align with anymore. But then they also get frustrated when we don't talk about ETH, but they only want to talk about ETH positively. And yeah, I feel like in this weird spot about that. Yeah,
it's upsetting if you're not blindly bull posting. You got to study Saylor. When your target is always 10 or 100x higher than today's price, it's, the community is always very happy about that, especially when he's always buying. So I think for whatever, with Bitcoin, whatever, the Immaculate Conception, whatever you want to say about Bitcoin, like it is not viewed as much as absurdism, at least with that asset, right? When Saylor and Cathie Wood and whoever else say that their target for 2040 is like 10 or 20 or 50 million a coin, you might look at that and go like, wow, that's kind of crazy. But I don't know. They don't get attacked as much as when XRP says the coin is going to 10,000. So it is interesting that there's a divide there.
Yeah.
In other news though, I maybe another good topic here. Stablecoins have been pretty big. I think there's a lot of ways we can go with this. I'm just going to run through a few headlines and like, let's just chat it up. But I think some of the big stuff that's been happening, like Stripe has been making acquisitions. They previously acquired Bridge. That was $1 billion plus deal. They recently just acquired Privy for the wallet sort of applications there. Plasma has been running its sale and recently increased their cap from 500 million to $1 billion, and that filled up again nearly instantly. Like I want to say maybe 30 minutes or so.
30 minutes.
They raised that money up, and now we're seeing headlines like Walmart and Amazon are considering maybe issuing their own stablecoins or getting into this game somehow. Like stablecoins have been a hot topic. It was a hot topic.
Circle is holding $120 right now. That's insane. That's $30 billion valuation for Circle.
Cheap.
Is that a joke, or are you a Circle buyer?
It is a joke to kind of point out the absurdism, but like if there's like one clear bet that like is kind of undisputable across crypto, it's that like stable coins are going to be massive. Yeah. And so you run into kind of the similar Tesla 2017 side where it's like the revenue doesn't justify this at all. How could anyone be buying it at this price? But then if you take the vision of like, all right, well, I don't know, you get 5 trillion USDC in circulation, like at that point, what is Circle worth? I think people just see what the US is pushing. And it's like the only thing that is unanimously agreed upon is that stable coins are great. And it is a massive use case for crypto. And then everything else is kind of up for debate, speculation. But like it's kind of the only pure way to express the opinion that stable coins will be big. And then even across like the administration, the only thing that they've been 100% clear and certain on is that stable coins, they're going to push and get rid of any red tape. Like it helps the US dollar a lot. Like, I don't know, people can argue whether ETH is money or ETH isn't money, but like USD is certainly money. And like, that's going to proliferate. So
yeah, it's just interesting to see everyone in crypto having a hard time buying Circle. And maybe that's not true. Maybe I'm not reading the room right, but at $120 I can't get myself to buy Circle. I can't do that. But then also I can just also imagine institutional FOMO driving this thing up to it doesn't matter. Like we know Tesla's at $1 trillion, which is insane. Why is Circle not one of those? I couldn't tell you, but man, it's hard for me to like buy Circle at 120.
I think the key point though is like the people buying Circle at 120 are not the same people that are like buying CryptoPunks or like speculating on Solana going 10x, right? It's kind of like the institutions, it's a clear thesis they can get behind. They have a lot of money. This is the play for crypto. And that's just going to drive a massive premium. But like no one saw this coming, right? Like they completely mispriced the IPO. I think it was the largest 2-day gain IPO of all time or in 10 years or something crazy like that. So it's just such a pure angle to bet on the one thing everyone's sure about in crypto that I think it's like mostly institutional flows. Just like, all right, this is one thing I can get behind. If crypto becomes this massive thing, Circle will be worth more money than it is today. So it's a buy.
Yeah. I'm very sad it hasn't shown up in my coin bags.
Yeah, I think I agree with that take broadly. Like, the timeline was, again, there was a focus on the revenues, the fundamentals there, saying, this valuation doesn't look that exciting to me. And then, just the fact that it's the only pure play equity kind of exposure vehicle to stablecoins, like you mentioned. It's hard to say that maybe you could have seen that, coming or predicted how high it would go here, like in the short term. But if the idea was for a fund or anyone else was to just get exposure to this, that's really one of the only options, at least within the equity markets. So that piece of it at least makes sense to me in the immediate term. We'll have to see how this kind of evolves. I don't know if they can just hang out at a really high valuation over the long term. It does seem like this tends to happen early days for some IPOs that are maybe highly anticipated. If it's a new category or like new business in a field where there's not a lot of options to choose from. Right. And so you might expect that to thin out, especially, over the next coming years, if we've got, who knows, if Amazon and Walmart and everybody else is trying to get into stablecoins, there might be a lot more competition on that front.
Yeah, I don't think there will be, because we know Tether will not go public because they're just not going to change their business model. Tether's always just going to be Tether. And then there's Circle. It's like 3 times smaller than Tether. And then after USDC, there's no other stablecoin that's ever going to go public. And so sure, like Walmart, Amazon can make their stablecoins, but we know that well, again, currently the market is not pricing in the narrative of stablecoins into Coinbase. We know that that's true, most likely. And so why would Amazon, Walmart be good stablecoin exposure if they try and do stablecoins? Because they have like the rest of their business that's going to dominate their valuation. And so there's going to be no other pure stablecoin play on the trad markets other than Circle. They're going to be the only one.
You don't think PayPal has a shot at it?
What has the PYUSD hasn't done anything, right?
No.
Yeah, it's pretty small.
Yeah, and I remember it being like pretty heavily like subsidized as well.
And market cap decreased on Solana after those incentives kind of ran out.
Right. Yeah. Okay. So there's 1 billion PYUSD according to CoinMarketCap, which I don't know why I'm looking at CoinMarketCap.
I guess the bigger question is like over the long term, though, how much do you want just raw exposure to this thing versus, you know, how much are you waiting based on its valuation to its revenues? Because I feel like, to me, that seems like in the short term, like, sure, like, let me just get exposure. I think the next few years for stablecoins, maybe like that's amazing. But I just think in the all possible imaginable worlds of the future in 5 to 10 years, like, is it still, you know, Circle is the only option and like there's not real competition over this industry? It seems like there's going to be a ton of competition. Businesses, like every headline seems to be indicating that, you know, all of these major trad institutions and large like corporations are very interested in stable coins. So I think it opens up the question of like, if there's going to be more competition, are they going to be able to maintain even their current market share, which, you know, Tether is still the dominant player here. And if other players come in, maybe this kind of breaks down a little bit further. You know, does the revenue picture and their earnings still look great, you know, 5-10 years out?
Yeah, maybe I think there's more of a 2-part question there. It's like, 1, are you a buyer of Circle right now? 2, how does Circle's market share play out? On the first one, I would say like, I think the reason we all spend so much time in crypto is because we feel like we have some edge. Like we have knowledge that other people who say are doing banking at Goldman, like don't know about crypto. And that's where you can be early and like do very well. And so I would say like if my uncle or mom asked me for like ways to get exposure to crypto, I would say like, I don't know, Circle stock maybe is a good way to do that. Like Bitcoin, Ethereum, Solana. Like it falls into that bucket, but it's not one, like I feel like I know more about the market and like that wouldn't be the best kind of opportunity zone for myself. It's a dangerous place to be where like, I'm not going to buy it, but you should buy it. But I do think that that's like kind of actually where this falls in. The other side, I haven't heard people talk about this yet, but I actually think that the attention that you get from having the pure play stock will actually help them gain market share. It's almost like your token is your best piece of marketing. It's almost like, all right, well, Circle has a token now. And it's like, well, everyone's going to watch what it does. And like, that's like I don't know, like say there's massive banks that want to use stable coins for remittances and settlement. Like they're going to know Circle because it's this $30 billion stablecoin thing that like everyone says is the future of stablecoins. It's like backed and endorsed in the US. It kind of checks all the boxes. And they probably use USDC because of that. So I think it actually helps them on that side. I don't know. I think you would have a very hard time competing with USDC and Tether as like a pure stablecoin. Like you have kind of long tail. Like Athena, for example, has done a good job of this, but like they cap out, right? There's kind of a max size that you can get to. There's different, you know, kind of yield bearing stable coins, but like, I don't know if you want someone to mint like $10 billion worth of your stable, are they going to go with like the obvious USDC side or are they going to try to get some yield bearing version? Like, I don't see anyone else becoming like a massive winner. I think it is like the network effects are actually pretty important in this case, and USDC just clearly has that for at least institutional size payments.
I think outside of just the pure plays, like this can also benefit, like we mentioned, Amazon and Walmart earlier. Like this can just help them with their businesses. I remember in London DAS earlier this year, there was this panel that talked about what were they looking at to get upside in crypto exposure, and it wasn't tokens, it was equities who use blockchains as the backend technology to improve their businesses. So like if Amazon had their own stablecoin, they could theoretically speaking, some years down the road, they could bypass credit card networks like Visa and MasterCard who take 2 to 3%. They're settling it on their own rails. They can control their transaction costs. And then Amazon is this whole ecosystem, right? So like there's Prime, Alexa, Amazon Pay, AWS, and then all of these services can be integrated into it. And like Amazon can offer incentives like discounts. So if you look at their counterpart in Brazil, Mercado Libre, who's basically like the Amazon / PayPal of Latin America. They've entered into like microloans and credits, and they also have some crypto services. And we can imagine like Amazon makes a lot of its free cash flow from ads. Why not something like why not BNPL with stablecoins like what Apple does with their card, right? Like these are ways that you don't need to have as much of a massive market as USDC to get as much, if not more, of the effects from it. But if Amazon did create their own stablecoin, I think it could compete.
Bach, do you have any thoughts? You've been silent there since you joined.
Well, I've been trying to get a word in, but you guys are very passionate. I thought we were talking Israel, Iran. Why are stablecoins?
Yeah. Drop your opinion. Let's get into it.
No. I'm not going to do that. Let's not take a risk. I don't want Yano to fire me. I don't have any strong opinions on this. I agree with Kevin that I don't see any new contenders coming in for a while or ever. I think that's what he said. It kind of all became an amalgamation after the 5th minute. But yeah, that's generally what I think. I think Efina's kind of capped. They are working on USDTB. It's kind of small right now. It's like 150 mil. Mark, is that correct? He doesn't know. They have USDTB. I imagine with Converge, it's going to get bigger and bigger. But I mean, I don't think you can really compete with Tether. I think most people have realized this. So we'll see how it goes. What else did you guys talk about? Is there anything more interesting than stablecoins? I'm really sorry.
Well, wait, before we move away from stablecoins, when Walmart says we're going to do stablecoins, is there like an actual business opportunity there, or are they trend following? Because I can't imagine what a Walmart stablecoin would do. I can imagine Walmart banking services just because they have the consumer relationship and they have the physical front end. They have the retail relationship. And so people that are already going to Walmart, you could imagine just like a Walmart bank being in there. Extending that to like why they haven't done that and why stablecoins unlocks that, I don't know. And then I don't know why, like maybe Brandon trusts, but again, I don't see Walmart's clientele being like power stablecoin users. So I don't really get it.
I mean, didn't Starbucks end up getting a lot on their gift cards, even though you don't imagine? So I feel like it would be the same playbook, no? Like somehow implement it and then return only half the yield. You're making the other half.
Right. So they just take the bank business model, right?
Yeah.
Yeah.
Except with less regulation, more regulation. I'm not sure what it's going to look like.
Yeah.
I mean, if you have the chance to earn yield on however much money you can, just by saying we're adopting cryptocurrencies, I would do it in a heartbeat. Would you not?
I don't even think you say you adopt cryptocurrencies. You just put it in the back end.
Yeah.
You just make it look like a regular dollar in a nice UX app.
Yeah, I will say like Amazon, Walmart, I mean, a lot of these larger retailer corporations, like they have their own pay apps now. Like there's Amazon Pay, there's Walmart Pay. So I have to imagine it's like part of more of a strategy there. Like I know everyone looks to like China and the East, for example, where WeChat and WePay and like we this and we that and we that, XYZ thing where there's like this massive integrated kind of services offering for a lot of businesses there. And clearly I think, some of these larger businesses in the US and elsewhere, they're trying to do the same thing. So I think I agree with you there, Mark, like just trying to kind of horizontalize a little bit further and like capture this associated business to our thing. If customers are using like our pay app, but then we can, reduce some costs and like drop stablecoins in there, or like, integrate some things into the back end there that make that a little bit better. That makes sense to me. Cool. Yeah, go ahead.
Did we do ETH is money?
We talked about ETH, but happy to go back.
No, I'm happy with. If you guys already talked about, I was a little nervous about that one. I was nervous we were gonna have on James Kristoff while we're doing ETH is money.
Well, he can crash out later. I think he's gonna come on later, and maybe he'll give his after take. But
did we give any hate to Monad?
Why do we hate?
Do you want to? You want to crash on Monad right now?
I was just curious.
Hit me, brother.
No hate for Monad.
There's a good topic in there. I guess what I would say is like, I think you see some criticism or back and forth between like, Monad is good for Ethereum, Monad is bad or competing with Ethereum. I guess I'd be curious your guys' thoughts. Like, David, if you have thoughts there, but then, Kevin, maybe from the Monad side, like, how are we thinking about this?
All chains are bad for all other chains, which includes layer 2s. And so, yeah, Monad is better for Ethereum than it is for Solana, I think. Any expansion of the EVM, I think, is better for other EVM related things. I don't really know if the analysis goes much deeper than that. Like, I think the maximally bull case for Ethereum downstream of Monad would be Ethereum, the layer 1 just goes faster because Monad becomes a client. Like, the Monad tech becomes like an Ethereum client. But there's like licensing around that. Like, Monad has like, you can't just rip that code and make your own Ethereum client, to my understanding. Maybe Kevin can correct me. But also, to some degree, I kind of hope that some rogue client team just like steals the Monad tech and makes an Ethereum client. I hope that happens, actually. And I say that as a Monad angel. So
yeah, I think I actually used to get this question a lot more maybe a year ago. I feel like the kind of ETH alignment meta conversation has taken a little bit of a backseat, but I don't know. My take on it is most people, when they talk about is this good for Ethereum, are basically saying like, will this use the ETH token? And if it does not, then it is an enemy of the state and is hurting Ethereum. I don't think that that's true. I think that Monad is going to make Ethereum, the blockchain, much better. And it's probably the only standalone project that will have done that in any meaningful way, like in the history of crypto. Like, there's been 3 years of research now done in engineering for Monad, for the EVM. Like, there are a lot of things that like Monad will go live and Ethereum is going to actually get more efficient and faster and better because of that. And so, like, in an objective standpoint, Ethereum will get better because Monad exists. Then people want to talk about like, oh, market dynamics and trying to predict like what happens. That's very hard to actually go through, right? You can take a million different stances and it's really hypothetical at that point. But I think like something clear, like an example of what I'm talking about. There's a lot of research being done right now on different opcode pricings. We think that like the pricing for opcodes is actually not optimized on Ethereum. Monad spends a bunch of time, effort, resources going through to like do that research and figure out what the accurate pricing should be, figure that out, implement it, submit it as an EIP. And like, there's no reason that like Ethereum wouldn't accept more accurate pricings for different opcodes, right? It, like, Ethereum gets better because of the work. Like, it's an orthogonal effort doing a lot of research, which like does contribute back to actually making Ethereum better. So there's a lot of like, I don't know, how many L2s are there? David, you might know.
No, there's so many.
But, all right, so there's 100,000 L2s and they're all trying to make ETH better in the exact same way because they're going to use it as a gas token. and use DA. Like some of them don't even use that, but so like they're all doing the exact same thing to try to strengthen the ecosystem. Mona's the only one taking this other approach of like doing an extreme amount of deep research that will contribute back, and like Ethereum will be strong. Like I think it really is kind of an iron sharpens iron type of thing, right? There's going to be things you can do on Mana that you just can't do on Ethereum. But I think the reality of how it plays out in practice is like somewhere greater than 0% and probably less than 50% of what Mana has spent a very long time building will be adopted by Ethereum, and it will be much stronger, much faster, much cheaper because of that.
I think that's the amicable narrative, but also EVM users and EVM-based TVL and EVM wallets are going to be Monad's like primary targets for growth. And so, I mean, there's the antagonistic side of this too, which is like Ethereum, the Ethereum base, any good things of value that Ethereum has is Monad's most proximate target for, that's their target. And so Monad would make sense to go after like Ethereum users and Ethereum assets primarily. Right?
Yeah, I don't think that like, listen, if we're going to justify a $89 trillion TAM for Ethereum, right? I don't think that like cutting the pie at the current place where we're at is like what actually matters though, right? Like if we have this view that like we need 100x across all of crypto via users, appreciation, like whatever, pick some KPI that means crypto is doing well, right? If we think that that needs to go 100x for crypto to be meaningful, 20% market share going to some new L1 in a short term does not change anything, right? In terms of long-term vision, Ethereum is going to be better at things than Monad will be, right? There's just different use cases. Mm-hmm. Like if the main thing you care about is being able to like self-stake and extreme censorship resistance, like Ethereum, throwing it on Ethereum is going to be cheaper than to do it on Monad. It's only like 2x, right? Like the main point of Monad is to actually have extremely modest hardware requirements. But like there are absolutely advantages of Ethereum over Monad. And so I think generally
is
what
Monad
we've seen
money?
In crypto, at least, Monad does not exist right now. We are a test.
Will Monad be money?
Monad. I'll let you kind of decide that via long form posts and stuff post launch. But yeah, I don't know. I think it's the same way I looked at Solana and Ethereum back in the day. It's like Solana is going to be better at a lot of things than Ethereum is, at least in the short term. Ethereum is the best at what it is, right? A decentralized, censorship resistant network, programmable, allegedly money, potentially oil, potentially the GDP of the US. But like it has strengths, right? They're critical parts of the entire crypto eco. So I don't know. I don't think like I can tell you from like the mindset of everyone working either at the Mana Foundation or like teams building on top, like there's no like backroom conversation where like, how does this vamp? Like, it's just not part of it, right? It's like, what can you build on Mana that was impossible to build before? And how do we get to that point as quickly as possible?
Kevin, what are some apps you recommend we check out on Monad? I feel like I'd like to hear out what like your top 3 or 4. I know you probably have to be diplomatic, so I expect that you might not be able to answer, but
I try out all the apps, right? I test them out all the time. I don't think this is going to be like the make or break for who everyone uses to check out, but I would check out Kuru. I think that's an awesome app. Their essential limit order book built on Monad. You can also launch tokens. Great UI, UX. Kizzy as well is like on the social betting side of things.
Kizzy's dope. I really like Kizzy.
Kizzy, I think it has the best UX of like, I don't know, any crypto app that I've used so far is.
I tried it out.
Kizzy's really dope. Yeah, it feels nice. If you use it, you're like, this doesn't really feel like crypto. Opinion Labs is really cool. It's essentially like pump fund for prediction markets. right? So it's like you want to bet or have a prediction market on something, you can like spin it up within Opinion Labs. I think that one actually doesn't get enough attention. I'm really excited for what that can be. Like I think we saw what happened with Pump Fun. We've seen prediction markets, like especially during the election, but in general, right? Like Polymarket has been one of, if not the breakout apps of this year. A couple perps dexes that are definitely worth looking into as well. But yeah, I mean, I guess it depends what the weird thing about a testnet is, like it's very, the apps that you would recommend are very like consumer, based on consumer applications, because like there's no money on the testnet. So like DeFi, the interesting thing with DeFi is like money.
Yeah.
Right. The interesting thing with consumer apps is like the actual app itself. So testnet is definitely more friendly to consumer apps and people testing those out.
Yeah, it's kind of like playing poker without any money. It's not really worth it.
Right. Yeah, it's a different. You're like, all right, this is, I can throw some banter around with my buddies and try to win a hand, but it's different. Yeah, it's a good way to put it.
I like the EVM is going to get better with Monad take. I think it makes sense. From what I understand, and obviously you're incentivized to say this is true, but you guys are the only ones working on both software and hardware, as opposed to just like limiting consensus and just like letting one massive machine do everything. You guys are the actually ones that focusing on decentralization a bit more than L2s, obviously, and then maybe some other EVM implementations.
Yeah, I mean the entire point, right? The core of Monad is if you write better software, you can get way more out of the hardware than you already get for Ethereum or Solana, for example, right? Solana, it's like, well, we can use a ton of RAM and that's going to speed things up a lot. Like kind of the main innovation that is the backbone for the entire Monad stack is optimizing the SSD.
Yeah,
it's something that hasn't really been done yet, but like rewriting a database or writing a database from scratch to like custom fit the needs of a blockchain, like that's been the biggest endeavor from the Category Labs team. And I think that's like, that kind of underpins all of the other optimizations actually having a big impact in performance, speed, transaction fees, et cetera. But yeah, the decentralization point is that's the entire key, right? It's like if you optimize the SSD, then like it costs like $1,500 to get a full node and run it for Monad. Like it's very modest relative to like if you want to be a validator on other networks.
Yeah. One thing I want to say is, David, actually, I think I've watched a few Bankless pods. I don't watch a lot of pods, but my favorite one was when Keone and Lei were on it, and they kind of got into this massive argument. I love Mega ETH. Like, I really like them. I like their approach. It's different, but I like their approach. I like what they're building. But I thought that was a really, really good, to the point that I'm trying to emulate it at permissionless by having both of them talk, because I want to steal your exact flow and kind of get the exact same interaction. I hope it works out, but we're gonna see.
By all means, yeah.
Danny, you're gonna?
Yeah, awesome. Well, I think it was great having you guys on. David, Kevin, intern. We got to chat both of your guys' maybe favorite topics, hopefully. ETH's valuation and a little bit about Monad and the ecosystem. Mark, thanks for coming on as well. We're going to transition into the second half of the show. So appreciate you guys joining us. And to the audience out there, go check them out. David with Bankless and Kevin at intern, as maybe more of you know him on Twitter from Monad, and Mark Arjun, of course, from the research team.
All right.
We're going to
see you guys in the Telegram.
Yeah, and come join the Telegram, actually. David's been in there chatting it up. So, you can chat with, at least this half of the Bankless pod, maybe in a less ETH-centric environment, I guess is maybe the way to say it.
Yeah, that's right. All right. Bye, guys.
Awesome. Thanks for coming on, guys.
Yo.
Are
we keeping Bach on?
Of course, man. This is my fucking show.
No. I mean, yay.
All right, round two. Is there anything you guys wanted, James? I know you were dying to talk about some things you were messaging in the Telegram while we were live for the first half. So if we want to go back to anything and get your takes on it, I'm happy to do it. Yeah, Bach.
I have one thing I want to talk about. Now, everybody who's listening to the bot, look at Westy and tell me he doesn't look like an 1800s Irish farmer or fisherman, right? Like the build is insane.
Are you serious?
No, it looks great. It's an ancient build. You don't see this type of face walking around cities anymore. It's from the past. It's very powerful.
An ancient build.
This is the value that Bach brings to this podcast and platform as a whole.
Yeah, I mean, I made some pretty good conversation. You have to admit, Danny.
I wasn't listening. I'm sorry.
That's fine. Danny, you have to admit.
What do I have to do?
You have to admit I brought some pretty good conversation.
Yeah, what did you say? Israel and Iran should.
Oh, come on. I'm leaving.
No, James, actually, what I wanted to chat about with you specifically and maybe get the room going on was we had a little bit of conversation in the Telegram this morning about the stablecoin piece. We talked a little bit just before with the other guys, but you actually had some pushback here on like why it even makes sense. Like why are all these businesses going to issue stablecoins? It maybe doesn't make sense. Don't understand what problem it solves. I guess I want to get into that with you. Like, what are we thinking here? Like, is the stablecoin narrative maybe less exciting than people think it is?
Yeah, I think like the Walmart stuff is super interesting, but I think a lot of times people aren't thinking about it from like a consumer UI perspective. So I think like for anything to work for like really, really non-crypto native people, like it has to be totally, totally abstracted away. Like if someone who's a Walmart customer has Walmart coin and they have Amazon coin, like I don't know, you guys tell me if you disagree, but I think that it would just never work for like your normal person who has no idea what crypto is, right?
Yes. I agree with that.
They don't know.
He doesn't agree.
Who doesn't agree?
Westy,
All right, the debate is over.
Fantastic. You won.
We can do the last panel to debate, maybe.
Yeah.
Wow, that was a quick take there. Not super deep. All right, let's get into another topic.
I guess like it's to me, I always wonder like, are they starting backwards from seeing this opportunity to earn the risk-free rate for free, and then they're working back to create a problem to solve, right? Like I'm sure there's a lot of people at McKinsey that have recommended all these companies create stable coins because it's a great business. Like I don't know, I use Amazon multiple times a day. I've never complained about the payments flow as an issue. I don't mind having my Amazon credit card hooked up to it. Like that to me is already abstracted away. It definitely sounds like a solution in search of a problem to me. I don't think that Amazon needs a stable coin to increase penetration, right? Like, I don't know.
Yeah, to me, it's not like an increase penetration play. It is like earning the risk-free rate. And you can imagine a world in which Amazon has a similar product to that of Starbucks, where people have their Starbucks app and they hold cash within the Starbucks app. I have many friends that have like $50, $100 in this app just sitting there, and you can imagine that adding up and then them basically holding on to that cash and earning the risk-free rate with a high percentage of that cash. So to me, I think that's like the play here, is to try and maybe make some sort of like Amazon rewards or like deposits on the website and make that like a normal user flow, and then you can earn like the risk-free rate on those deposits potentially.
Yeah, I think that's probably right. It doesn't strike me as something that's like particularly exciting or groundbreaking. I don't know, especially if you also consider like the scale of Amazon's business, like how much of their net income is actually not driven from their standard Amazon consumer business. Like, does this really move the needle for it on their bottom line? Maybe, I don't know. But yeah, it seems like more of a headline than something that's like really groundbreaking and exciting to me, at least.
Yeah. And also like my take is probably a bit bigger brain than what's probably actually happening. or I think Nick Carp had a good comment on the Twitter chat where he said Walmart like hasn't even figured out Apple Pay yet. Like, how are they going to figure out the stablecoin thing? And so it makes it more likely that it's like chasing headlines and seeing that stablecoins are hot right now, and that, you know, Stripe is acquiring stablecoin businesses. All these other players like Starlink is using stablecoins. Like, they're just hearing it so much, they feel like they have to say, "Oh, we're in the game now," despite having no actual concrete strategy.
Yeah, I mean, certainly part of this is, you know, the big corps. They see the headlines, they see what's happening with other businesses, and you know that there's someone who's making a decision at a, you know, high enough level that says, "Hey, spin up a group and let's brainstorm some ideas on this topic." And I think that's kind of how you end up with a lot of announcements like this. Certainly back in 2021, when we had all the Twitter accounts tweeting about, you know, "Hey friend, what's your favorite NFT?" You know, part of that had to have been, you know, "Hey, we need to get some motion going on this crypto stuff. Get involved. Let's get some mindshare going." So to an extent, I can see a piece of that there, but I think I agree generally, like James Westy, like, you know, maybe a piece of it is net interest margin. Maybe a piece of it is like, you know, some cost optimization from the perspective of like processor fees or other things, if you can, you know, swap out back end systems. But in the immediate term, you know, it's probably not that exciting. These are things that are going to take way more time.
Yeah, and like I had this discussion, I think Christy, who joined the chat recently, like I'm sometimes kind of confused as to what people are trying to solve for in the domestic space. Like, I think we've known for a really long time, like cross-border payments to emerging markets, and you know, someone in India being able to buy USDC with like native rupees that are inflating every day. Like, totally, I got it, I'm sold. I'm still a little skeptical when people are like, "Yeah, we need stable coins for me to go down the street in Manhattan and buy coffee." I'm like, I don't know. Like, my Apple Pay has worked for a really long time, and it's my credit card or my debit card or my Starbucks rewards points. Like, that flow is great. It's fine. I'm not really sure what problem is being solved by throwing USDC in the mix of that and me paying with USDC to a merchant.
Well, I think it's difficult for Americans to always understand this because you guys don't have this issue. But like you said, there are countries that have this issue, and cross-border. I mean, you would know more about this than I do, James, but I assume cross-border settlement is kind of an issue. Is this correct?
I mean, it depends, right? I mean, like for an average person, yeah, it's like next to impossible. Like, if I wanted to, you know, get pounds or get like Singaporean dollars, like, it's very difficult for me to do so versus like going to the airport and buying cash, right? Like, there's actually no way for me to just like save my money in other currencies. So that I get. I just don't know if is that a big market for people. Maybe, maybe not. I'm just thinking of this within the context of like people talking about stables as payment within the domestic United States, which is obviously the biggest market in the world. I don't really get what the point of it is.
That's fair.
Yeah, I mean, I think to that point as well, like, you know, Stripe, they acquired Bridge for $1 and some billion, and that's, you know, the target there is for facilitating cross-border payments for probably mostly businesses, but maybe consumers as well.
I have a question about Bridge. Can I start my own bank or my own stablecoin using Bridge?
When you say bank, what do you mean?
Just my own bank.
Like via the terms of law? I don't know.
We're not lawyers. Yes, Boccacio's bank is now open for business.
You know, well, why not? Isn't that the whole point? You can set up your own infrastructure and your own stablecoins. Why shouldn't I be able to? It's permissionless finance. I'm trying to take on risk, and people should trust me with their money. Isn't that the point, though? I'm being serious. Isn't that what they're allowing? It's for people to build out. Why are you laughing, dude? It's for people to build out infrastructure for lending and borrowing money. I think I believe I have a finance degree. I believe that people should trust me with their money. Can I do it? Westy.
Just that quote, "I want to take on risk. People can trust me with their money." Having to do with stable coins.
Dude, I want to go bank mode, 0.1% collateral. Let's make a movie.
I mean, you're kind of joking, but this is what every bank is thinking about. It's like, how can we make our own stablecoin? It's like, that's not going to work, because then you have like fragmented liquidity in like your individual stablecoin. Like, what's to say it's going to get adoption? Like, really, people are going to flock to like the network effects that already exist, because you have liquidity to get in and out.
Yeah, I'm fairly like, if I had to guess and without knowing anything myself, like I would be very surprised if there wasn't like a consortium bank stable that gets launched in the next couple of years. Like that seems like a fairly high probability event. Like there's not going to be JPM coin and Goldman coin and Morgan Stanley coin. It's very, very probable in my mind that there's going to be a centralized bank issued stable.
Ian, welcome.
What's up, guys? How's it going? Happy Friday.
Thank God, am I right?
You can really feel
I
the
didn't
pull
know.
of the weekend.
I didn't know you were involved in Wolf Swap. Nice.
Yeah, APEC, DevRel lead, Wolf Swap.
That was one of my first investments, actually.
Yeah, you've been good to us. You've been a real value add on the cap table.
Thank you.
Ian from 0xResearch has been keen on this bit for a while, but we're here for it. I'm curious how Teddy's doing with his investments into Wolf Swap as well. I know he's been glued to the screen for the past few weeks.
Yeah, I mean it's one of our highest conviction plays, obviously. And Boccaccio was the one who facilitated the introduction, so thanks again for that, Boccaccio. You facilitated the intro to Wolf himself. So for
there he is.
Yeah, for the stablecoin stuff, I do agree with like James's take on that. You'll probably see like a Zelle equivalent for some stablecoin.
Okay.
I'll bring it back to seriousness. Danny, there is one thing that Mike was talking about in chat, and we were actually going back and forth on it, and I think I actually kind of changed my tune on it, like did a 180 today. If you want to talk through this, the bank funding mechanic of stables, which is very nerdy, but I think interesting.
Yeah, you actually just run it. Keep going.
Yeah. So like initially Mike had a post that I agreed with, that banks issuing stable coins would actually eat into their net interest margins. So if you think of like, just generically how a bank works, they take bank deposits, they lend them out at some risk rate, and then they pocket the spread between that. And then obviously they don't pay much to depositors. So Mike's thought that I was initially on board with was like, if they take a deposit and then invest it into the risk-free rate, like that's going to be lower than their spread on all of their other loans that they're making at risk within the bank. So it's actually going to be net negative for them. And then I kind of rethought it a little bit. I'm like, wait, no, I actually don't think that's how it's going to work. And it's going to be more like they're offering this as a product, similar to, a custody asset on a bank's balance sheet. Like, so for example, you look at like Bank of New York Mellon, right, which is one of the biggest custodians in the world. They have $53 trillion of custody. Like those assets from an accounting and capital perspective don't actually sit on their balance sheet as an asset, right? So the way I assume this flow is probably going to work is JPM or whoever will offer this as a product, where basically you just give them your money and you get a stable coin in return. And then they don't have that asset on their balance sheet. And then they basically just get to invest it in a money market fund and clip the interest on that. So I think it's actually going to be very, very accretive to them.
Ian, what were you talking about?
You're not going to acknowledge what James just said? You're not going to any feedback? I mean, it's a good little spiel there.
My brain is so rotted. I can't.
I thought you have a finance degree. I was supposed going to be impressed.
Yeah, but like the shitty kind of finance degree, if that makes sense.
That makes sense.
I do think we can kind of go back and forth on like maybe what it would look like or how it would be valuable, but it does seem like maybe a piece of this is relatively up in the air in terms of the legislation, though, right? I don't know your
totally.
thoughts there, James, as well. Like, it seems like things could be completely different depending on what is allowed or not allowed in terms of maybe what the backing has to look like, or how yield can or cannot be, or needs to be handled. Because maybe they end up looking more like actual dollars, or maybe they end up looking more like sort of like money market funds, or even something else. I don't know. And it seems like things like Athena kind of throw a wrench in that as well, right? Like there might even be some more differentiation here.
You shouldn't have brought it up. James, can I get your honest thoughts on Athena?
What do you mean?
Well, what do you think about it?
Do you want him to crash out?
We did this one before. There's no reason to crash out. You know my thoughts on Athena. I think it's a cool idea. I think the product is great. I think looping it and borrowing it is silly. I don't think we need to go into super more detail about it, right?
All right. Let's get away from the stablecoins. We talked about stablecoins for, I want to say, 40 minutes at this point. I've got another topic I think is really relevant. I know Dan Smith is wiggling in his chair like he's so excited about these comments from SEC Chairman Paul Atkins, but some big takeaways from Paul at the SEC. Let me pull it up. Just a quick screen here, but he dropped some information in a quick little note on some different things in relation to the SEC's view on different parts of DeFi and crypto. The big one here is saying the right to have self-custody of one's private property is a foundational American value that should not disappear when one logs onto the internet. I'm a favor of affording greater flexibility to market participants to self-custody assets, especially where intermediation imposes unnecessary transaction costs or restricts the ability to engage in staking or other on-chain activities. I'm going to run through a couple more quotes because he said a few things that I think people might find interesting. One of the other ones being, I'm grateful to the Division of Corporation Finance staff for clarifying its view that voluntary participation in proof of work or proof of stake network as a miner, validator, or staking as a service provider is not within the scope of federal securities law. As happy as I am over that step, it's not a rule with a force of law. So the SEC should adopt some regulation based on their authority, is his view. And then another big one he mentioned was, and let me just scroll down a little bit, specifically mentioning how they might interact with DeFi and crypto related platforms going forward. Essentially saying that, potentially urging the SEC to have a bit more of like an innovation exclusion framework in mind to allow teams and developers to kind of bring products to market such that they're not, unduly burdened by, red tape, basically. But all in all, like several comments here that are very positive and, seemingly productive for crypto and DeFi. Kind of continuing this like 180 away from the regulate, legislate, and like kind of sue and knock down from the prior administration, prior SEC, and their approach to DeFi apps. I guess one of the big ones, and maybe Ian, I'd love your thoughts here with your, research and interest, like within the validator scene and, staking platforms and restaking and things of that nature. Like having this view around validators and staking as a service providers not being kind of like within the scope of law. I don't know. Has that been a problem for you or for others in the industry, like in the way of conducting business?
Yeah, I mean, first of all, totally agree with your take on like this being a full 180, especially from like the Gensler regime, who without a doubt was trying to squander the industry. Yeah, I mean, this is great. I mean, this is just like fantastic to see. You want American businesses to be operating in America. You don't want them to have to set up all these like offshore entities, all these other things. Like you want the same transparency that comes with operating any American business. And so, I mean, for us from the staking side, like that's great. We're really happy to see that, and I'm sure a lot of the other like institutional players are too. Like I think now this is a pretty big thing right before the Solana ETFs actually go through their approval process as well, where now this looks like there's going to be some staking introduced with a lot of these products from the get-go, which is pretty cool. So because like if you're going to be buying and holding an ETF, you might as well have that asset be staked. So hopefully you'll see, you know, institutional grade products and institutional liquidity grade products like Judasol, like integrated with a lot of these ETFs from the start. I mean, that would be fantastic. But yeah, this is awesome news. And just you know, imagine reading that a year and a half ago or anything like that. Just saying like this is what the SEC chairman will be saying. Unreal, fantastic.
If there's no other big takes there. One thing that I found really interesting from this was another specific comment here about he said most current securities rules and regulations are premised upon the regulation of issuers, intermediaries such as broker dealers, advisors, exchanges, clearing agencies, etc. But said, you know, the drafters of these rules probably did not contemplate that self-executing software code could displace them. So he said, I've asked the commission to explore whether further guidance or rulemaking may be helpful for enabling registrants to transact with these software systems in compliance with law. This to me sounds really interesting, right? Like I think in the past there were, you know, some attempts to call like self-custody wallets and other things like, you know, describe them as like brokerages or that they were like offering services basically for their clients that might kind of put them into one of these classifications. But I think as we know, like a lot of DeFi applications, it's you kind of throw it up there online and it's available to be used. And, you know, there's maybe like greater levels of involvement in some cases more so than others, like depending on, you know, if there's nodes and other pieces of software that are being operated by individuals or groups or what have you. But it does seem like we're maybe stepping in the right direction here. I guess I'd be curious anyone's thoughts, and maybe James, yours as well, from kind of the more TradFi side. How do we think this like things might shape out from here?
I think it's like like echo what Ian said. Everything is a good sign. I think like I don't think anyone would look at this and say it's anything but amazing compared to where we were a year and a half ago. I mean, everyone that I talk to is pretty geeked up and trying to do more within crypto. I think with the ultimate goal of eventually being able to trade the asset natively on a bank's balance sheet. I think like I'm optimistic that it'll happen probably within the next 3 or 4 years, but I think it'll still be kind of a slog to build out the tech and get the regulation in place. But everything like this, like without being super specific, is just an incremental good sign that it's going in the right direction. I guess my only fear is that like this stuff is only as workable as the administration is friendly to it, and I really just have that kind of like nervousness in the back of my mind that if in the next administration it be someone that is less friendly to crypto, if this stuff goes backwards, I would really hate to see that. And that's kind of why I wish the Trump family would be a little less directly embezzling funds with crypto. It just kind of I think sets the precedent for Democrats should they win the next election to reverse things. But you know, I think that's super far down the road.
Yeah, I don't have any other takes really other than this is good. These are good. I feel like I already knew when Paul Atkins was sworn in as the SEC chair that he would be very favorable. It is nice to see it actually like in paper, and the language he used was great. But for the most part, this is kind of information we already knew. And so I'm thinking about this from a market perspective. It's like these comments shouldn't change too much about what's priced in. But it is cool to see from someone who works in the industry and has had years of like the SEC just bashing down constantly, that like seeing these things written down is like, oh, like incredible. This is what we've been fighting for years. And I strongly agree with James's point. It's like you feel good about it now, but then you think ahead and you're like, okay, yeah, if Trump continues to like continue to be this close to the metal with crypto and doing quote unquote like nefarious things, I guess there's like certain degrees of that. But if there's like a change in the administration in 3-4 years, like, and he's so close to crypto, is there like a 180 switch if you see like Democratic control? Like, do they start just going back to the Gensler regime of bashing crypto again because that's the easy anti-Trump thing to do immediately? So like, there's definitely that I'm thinking about as well. That I think not enough people are talking about.
Is every incremental Trump crypto project like a negative to the space?
Kind of. I mean, the first one or two, it's like you're just trying to get involved, but it's like the more that these teams try and layer on, like the fight team doing the meme coin and then doing like a second Melania coin and then now trying the wallet. It's like they're doing too much. Like you have to know what the line
At this
is.
point, that's like ambiguously true that it's bad. You can do like, yeah.
They had
Censored.
to silence him. They had to fucking silence him. That's crazy. Yeah, I agree with you. I think it's too much. I wonder if the market will just self-correct itself eventually, where it like stops giving it attention or as much attention, such that it stops affecting it. Like if liquidity stops flowing towards it every time it launches, then eventually it stops being a problem, right?
Well, sure, but it's like they're going to do that until the liquidity stops, right? They're just going to keep hammering it, taking as much money as they possibly can that the market gives them. And I'm saying that approach is a short-term good strategy, but a bad long-term strategy, because like as soon as you get to the point where the market is no longer rewarding that is you are at a point where the sentiment is negative around that thing, right? It's like you should quit while you're ahead and try and play long-term games, and like win in the long term versus the short term.
Something I've related it to in my head is like when you see celebrities launch product lines, and obviously this is different because they're finance apps. Like it's a little different than, you know, Kylie Jenner having a clothing line or a makeup line, but I do think you see similar opinions get expressed in those cases as well, where it's like, you know, yeah, let's take an average thing, stick my name on it, and then get a massive premium from retail people who follow me for selling it to them. But I also think that like that's just kind of the state of the world that we live in. Like, you know, influencers can flex their brands and like get a premium for basically selling products and content to their audiences. And so it doesn't surprise me that, you know, Trump and the Trump family are doing the same. I might get a little upset that how much and how, you know, open, like out there they are with it, but
yeah,
kind of his
I think
brand.
it's it's definitely his brand. You know, like he has a massive building right in the Chicago River. Like he has a couple of buildings in New York, buildings all like hotels all over the world. He had ties, like everything he's done essentially in his business world had his name branded on it. So it's like, to me, it's no surprise he's a token. Obviously, like he's not like the personal one launching it or anything like this, but I mean, it's definitely like a hard line to toe, obviously. But it's like, you know, if we get this and then actual like favorable regulation of any sort, and the regulation seems to be really sensible, I'll take that as a byproduct. I don't really mind. Like literally, Gary Gensler was trying to kill the industry, and like a handful of Democrats like Elizabeth Warren trying to kill the industry. They were suing every single exchange and every single team that was trying to build on shore. They're lying to them. They're gaslighting them. It was the worst possible setup we could have had. So I am happy with the 180 on that. I will take all of the other, ridiculous stuff that might pop up in the background as byproducts, because like that's the nature of crypto. Like you're gonna have ridiculous things pop up no matter what. If it's like truly permissionless. So I don't really care personally.
Cool. All right, I got one other big one that I think maybe Boccaccio will have a strong take on. Perps, Clobs, Hyperliquid, all over the timeline. Coinbase the other day mentioned US perpetuals coming soon. Yes, you already have your hands up.
Bet against Coinbase. Anytime you can bet against Coinbase, bet against Coinbase. Chips, you know that Chud meme where he's like, I'm all in on nothing ever happens? I'm going Chud. I'm all in on Coinbase not doing it. It's either Hood, Hyperliquid, Binance, Kraken. These 4, fine. Coinbase, I'm all in. Nothing. They're not going to figure it out. That's my take. We can continue.
Yeah, clip that.
Do not clip that.
I mean,
definitely clip that.
Clip it. Didn't we do this last week where you're like, see, I told you Coinbase is a bad company, and you're like, yeah, you said that when Coinbase was trading at like $30. You missed out on a 10x. Like, congrats, okay. You're right.
Well, I knew it was going to go up 10x, but it was going to drop after that, which is why it was just too much of a risk for me at that point. No,
totally.
I didn't buy Coinbase because I instead bought Hyperliquid, which is up 30x. So it's not.
I mean, did you buy Hyperliquid or were you gifted?
I'm an indentured servant. Servant on undeserved airdrop. Doesn't matter. Look, anytime, would you bet on David or would you bet on me, Westy? Tell me this with honesty.
I think that's actually a tough question.
Danny, finish your question.
Maybe we should have David on right now and hear from him. I don't think he's available at the moment, but
hey David, great. I know you just had.
He's in the chat.
Do you want to come on the pod?
Oh, he is available right now. David, if you're at your screen right now, I'm dropping you a link. You're gonna get in here and debate Bach.
The Coinbase, like, I don't know. The most interesting thing to me there was like people think it's gonna take away market share from Hyperliquid. It's like, do you think people are trading on Hyperliquid because they can't trade on Coinbase? I think a lot of people look at these new product launches as very like zero sum. It's like, I imagine the pie just gets bigger. Like you're probably going to see this also productized by Robinhood. Like perpetuals are obviously just going to get like bigger and bigger. Crypto is going to continue to grow. It's not like zero sum, you can only have so much of the pie. But like obviously the one to dethrone is Binance. Like Binance is still the king of perps. And that's going to be really, really hard to dethrone them. And so, yeah, I like the Coinbase edition is great, but I don't think you need to look at that and like, oh, wow, like this is the bear case for Hyperliquid. That's definitely not like that logic does not track at all. And if it does track in your head, reconsider.
I do think that it could be kind of I don't think Coinbase is a bear case for Hyperliquid because bet against Coinbase, but I do think that Robinhood launching perps in the US could be not like a bear case because I think Hyperliquid would probably still do okay. I don't really believe in all of that. Oh, it's just regulatory arbitrage thing. I don't think it makes a lot of sense because all of DeFi is regulatory arbitrage. So I think it's kind of a cope take.
Yeah,
but
I don't think it's a cope take. But I'll follow up. Continue.
I think regulatory arb is very much a manufactured term.
Yeah, it's what Ryan Connor says, and bet against Ryan Connor right now.
I don't know if it's the perfect term, but it's definitely this like US people want to trade perps. Where can they do that? Where can they actually do that? Even if it is using a VPN. So like if you call that regulatory arbitrage, I think it makes sense. What are you doing with all the screens here?
Dude, we had to kick Danny off, so I fixed it up to the original format. My bad.
But the thing is, it's like, yes, it's a place where people can actually trade. They don't have to KYC. But then if you introduce other trading venues, it's not like people will change their behavior. Like now, Hyperliquid is just because of their nature, they're now directly competing with your Coinbases and Robinhoods, and they're probably going to have more liquidity, lower fees. Definitely than Coinbase, lower fees. And like, I think the question is like Hyperliquid has dominated the share of people trading perps in crypto today.
Yeah.
And who are the net new people that are going to be trading perps? Where are they going to trade is kind of the question. It's like, do they go to Coinbase to trade? Maybe. Hyperliquid does seem like it's still in a pretty good position.
Yeah. I think Robinhood scares me more because they're really good at UX. I wouldn't be too worried about Coinbase, but like Robinhood's UX is good. I'm a bit worried because Hyperliquid has mobile technically, but it's through the progressive web app thing and not through a good application. I mean, if
Who's trading perps on mobile? Are you trading perps on mobile?
I'm not, but people will. I mean, people trade options on their phone. You know, it's like, I know that's not the majority of the world, but it's like it's what market makers want. They want dumb flow, and that's it. It's like
very much Robinhood type users, right?
Yeah.
Like I definitely think they'll be able to, you know, productize that nicely, and all these other things. Like if you look at the amount of like 0 day till expiry options traded on Robinhood, it's ridiculous. And so it's like people, there's already an appetite for this type of thing. I think like they could literally just do like an up down, and then like duration of time, and then X amount of leverage or something like that. But like, people are gonna be trading them. But again, it's a different audience.
Yeah, it's a different audience. We'll see. I think I'm sure there's teams on Hyperliquid working on this. Unironically, I think like a good thing of decentralized cryptocurrencies and blockchain technology is that there's people can build on top of things and then capture fees off of that. Versus I feel like no one's building an alternative Coinbase front end or an alternative Robinhood front end, but some guy could build a mobile front end for Hyperliquid and make it really, really good, and just tap into the order book. I don't know if they are, and I don't know if they will, but it's a possibility. So my booking
Axiom, right? Like that's an example, right? A good example.
Yeah, I actually think Axiom probably did or will continue to do really, really good for Hyperliquid just because it's converting that class of Solana people into, I mean, if it can convert 1% of it, that's like the ideal flow that you want into an exchange. It's people just putting on 50x longs. No? I feel like the moment I became host, we just started talking about Hyperliquid, which is probably not.
That's so weird. I don't know. It's just so strange, isn't it, Westy?
Yeah, it's so weird that it just happens to flow that way. Did we have David on or?
We do, but we don't share the data on the live stream.
Okay.
Dude, there's free effort capitals trying to join in. This is how I know.
So, what are your thoughts on the Coinbase announcements?
Mine?
Yeah.
I think it's good. I'm happy with it. I won't ever use it because they like block you from using the exchange for no reason. I won't use it, but I'm sure it's good for the people who might not get blocked. I have seen some pretty stupid comments, like people quote tweeting it and saying like, oh, but like, why would you create a physical card when everyone's using Apple Wallet? Well, if they're creating the physical card, they're also going to integrate it into the Apple Wallet. Are you fucking like stupid? And it's always like these. It's always the protocols that are like super academic, but don't have anything out yet. So like, just spewing hatred towards everybody. Yeah, that would be.
I've not seen any of those takes. I don't know what kind of timeline you have.
Dude, my timeline is he going to be able to speak?
I'm here.
He's there.
Sorry, apologies for no camera. Can't do that right now. But Box said short Coinbase, and that's pretty much my bat signal. So I had to jump on, defend my bags.
We're glad you're here.
Thanks for having me on. Yeah, you guys started talking about the Coinbase product announcements.
Yeah, what do you think?
I think there's really nothing that was like unexpected. U.S. perps, I saw that was kind of like hinted at probably a week or so ago at some, I think it was like a Morgan Stanley summit. I think them trying to become like this thin layer portal or front end for decentralized finance, tapping into base dexes, tapping into other chain dexes. Like that's kind of the writing's been on the wall for that for a while. I think they realize that they need to disintermediate themselves and tap into DEX liquidity. This actually could be like long-term bullish for Hyperliquid. Like if it actually does become the perps exchange for global finance, all Coinbase has to do is really own the front end and drive order flow to Hyperliquid. So there's a chance that like this is actually net bullish both Coinbase and Hyperliquid long-term. What I thought was a big miss was the Coinbase credit card. I've been begging for a Coinbase credit card for years. And I know Westy and maybe some others on this call probably disagree with me. But I think you need something that's like familiar to non-crypto people, normies. I'll use my wife as a canonical example. I don't think this credit card, like usually credit cards are not revenue drivers for companies. They're customer acquisition tools. Coinbase already has the crypto native audience. Robinhood is trying to capture crypto native audience from Coinbase. Coinbase needs to do something to capture normies from Robinhood and capture normies from other traditional financial institutions. And I don't think a Coinbase credit card that gives 4% up to 4% back on BTC is going to be familiar enough to get the next net new user or marginal user onto their platform. I could be wrong. I hope I'm wrong. That kind of didn't move the needle for me. I'm a little disappointed in that. What I thought was a big miss was that they didn't talk about anything related to tokenized stocks. I think that, like, again, the writing is on the wall for that. I think they should be pushing towards that. They need to probably acquire a Webull or an eToro or something to try to get the equity normie TradFi person into their ecosystem. But I think not announcing anything like that, big miss from my perspective. And they need to move fast because it's obvious like Robinhood's going to be launching a crypto native product, whether that's an L2 or tapping into Solana. Who knows? We'll find out in the next few weeks at ETC. But those are my like immediate thoughts. But want to hear what you guys think as someone that, or some people that don't, I guess, have heavy coin bags.
I actually like your takeaways there about them being kind of out of step with the rest of the category right now. Like Kraken and Robinhood are making some similar moves, right? Like offering US equities on chain to like the UK and other places outside the US. Obviously, Robinhood already offers equities within the US, but it's interesting to me to see both of them going after that angle and not see like similar immediate or like recent announcements or kind of potential announcements of US perps like Coinbase has. They're kind of like on opposite sides of this one right now, which feels interesting to me.
Yeah, like I think the hood versus coin debate is if you think Coinbase is just an exchange, if that's all you think Coinbase is, then like Robinhood will, at least in the short to midterm, I think like the writing's on the wall that Hood will win that game just because they have better distribution and it's much easier to venture into crypto than it is venturing into equities or TradFi from like Coinbase side. But if you think Coinbase is much more than that, it's like a pure play on the entire crypto stack, all the different infrastructure that they have, the developer platform, their partnership with Stablecoin, with Circle, and you want to be like bullish the growth of stablecoins. Obviously, you can do that through Circle, but the reality is Coinbase makes 50 to 66% of all Coinbase or all Circle revenue right now. So I still think Coinbase is the better pure play bet on the crypto ecosystem, 10xing, 100xing from here. But if you just want to look at Coinbase as just a centralized exchange, it's like then Robinhood's definitely the better exchange bet.
Well, what would you say is the other thing for Coinbase again?
I mean, over, what is it, like 30, 40, 50% of the revenue is stablecoin revenue right now. So, I mean, obviously, like they're a better stablecoin bet than Robinhood will ever be. Yeah. At least they're trying to make inroads on that. There's part of this whole consortium called, I think, Global USD with Paxos and a couple other FinTech companies. So Robinhood definitely is like making that play into that venture. But I mean, you guys already talked about it earlier today. Like nobody's going to beat Tether or Circle, I think, anytime soon. So there's other, and like there's going to be a world where eventually Coinbase monetizes their Coinbase developer platform. They're monetizing Coinbase business now. Like they're making inroads to be an infrastructure, crypto as a service layer for the entire global financial system. Like that is the bet. Like I don't see Robinhood ever getting there. So if you think like that TAM is larger than the exchange TAM, which is like currently Coinbase's largest revenue driver and largely what Robinhood is today, then I think like you could still be, I'm still long-term bullish Coinbase because it's a bet on other layers of the stack outside of just like the exchange layer, which is largely what Robinhood is today.
So my comments on the credit card, which I wasn't necessarily disagreeing with you. If anything, I was just confused by your tweet where you were like, I thought about it. This is a bad idea because they're not onboarding people. The thing they need to do is have boosted Morpho yields. That's the thing they need. That's how I read your tweet. And so I was confused by your stance. But it sounds like we agree, actually, that it was like really a tiny step in the right direction, but not really a large one because they're not obtaining a net new audience with this kind of credit card. What they're going after is like your crypto casuals, because the degens aren't going to use this because it requires them to keep a bunch of money on Coinbase, and they don't want to do that. They want to own their own keys, have their own infrastructure. They're not getting your TradFi person that doesn't care about crypto to be onboarded. You're getting like your crypto casual and the type of user that already uses Coinbase. So you're not actually getting any net users really from a credit card like this if you require Bitcoin to be what is purchased with the cashback. Instead, it should have more optionality. Like you should be able to get USDC back. And if you do that, then you do onboard potentially a new audience because that cashback can be way higher than other cards. And then you have them in the Coinbase ecosystem. You try and onboard them to on-chain stuff on Base or to use your exchange, etc. To me, yeah, it feels like they, for the most part, failed at using this kind of credit card mechanism to actually onboard new people into Coinbase. So yeah, that's my comment on credit card stuff.
Yeah, I think there's two different plays here. It's like, historically speaking, financial services has been like an aggregate business. Like you want more capital on your platform, you want more customers, and you can drive. It's a low margin business, but it's like high volume. That's kind of like the way Robinhood's kind of, I think, approaching their strategy, not just for crypto, but financial services as a whole. And I could be wrong here, but what I'm thinking Coinbase's strategy is they think there's going to be a Pareto distribution of revenue, and they'd rather increase the lifetime value of their power user customers, which is going to largely be crypto natives. And they think, like, I guess crypto native capital is just going to, I don't know, be a large portion of global wealth one day. Like they'd rather just squeeze more value out of their power users, the 20% power users of their platform, instead of like trying to grow the overall customer base of Coinbase. Now, I could be completely wrong here. Maybe they truly think, and they surveyed a bunch of non-crypto natives and normies and think like, yes, this is actually going to move the needle to get people that are sort of interested in crypto, but have never actually allocated to move to Coinbase's platform if they know they can get passive Bitcoin by spending on their credit card. Like, I could be wrong here. I was talking to my wife about this earlier last night. I was like, would you ever use this credit card? And explained to her the difference between like Robinhood's Gold card and like our Chase Sapphire Reserve we currently have, and like the Bitcoin card through Coinbase. And she was like sort of interested. She's like, yeah, this could be a nice way of like passively buying Bitcoin without thinking about it. She's like, it's interesting, but I don't think she would actually want to move forward with getting this credit card. It's part of our repertoire of other credit cards we have. I don't know. Maybe I'm overthinking it. Maybe this will actually move the needle for a lot of folks. I just don't see it. I think it was just like such low-hanging fruit. Just do something that's super familiar and you can get people on board. And my thought on trying to tap into some crypto native yield, like through Morpho Boost or Arrow Boost. Like, yes, those are probably bad examples. But I think my thought there was get a baseline yield that's familiar with normies. And if you want to get them interested in crypto, start sprinkling in some crypto native yield that is not, maybe it's 0.1% in Bitcoin. So just something, but making it just forcing users to get 4% cash back in Bitcoin, I think is just like not the right move.
Yeah. To me, it doesn't seem like even the card. It's like you mentioned earlier, or in that statement, like, get your power users, like eke a little bit more out of them. But I don't think you eke more out of your power users by giving them a credit card with 4% back. Like the people who have whatever the balance requirement is to get the max reward, they're probably paying their CC balance off in full every month, and you're not earning any interest or any revenues from offering the card. You're probably spending money for them to even have it in the first place. And so, like, looking at Robinhood, for example, and their gold card, like, to me, it's not surprising that maybe it's taking a long time to roll that out, because they need to, I think if they gave that to all, 30 million customers or whatever, they'd run into the same trouble on that immediate go of, I'm sure you have a ton of people on the platform who want to get, 3% back on everything, and roll that into the other kind of benefits that they get on Hood. But the economics there probably don't make sense to just offer that up like all at once. But I do like your point about wanting to get customers to do more inside of their ecosystem. I think maybe the tricky part is like they need more products, to be honest. Like, they've been adding things, right? And US Perps is probably another addition there. And obviously there's Base Chain and the Coinbase wallet, and they've been rolling things out. Go ahead.
The 4-hour candles, they added that.
They added 4-hour candles. But like, I just think when I look at the Hood kind of setup, it's like, if you transfer over your 401k or if you transfer assets from another platform, like they'll give you a boost. And then if you trade, like, or deposit a certain number of assets, like, you get interest on that from the, the risk-free rate or their, their cash sweep program. And then, they offer different benefits for, maybe you get reduced fees for trading. It's like, they kind of have that, we love the word flywheel. They kind of have a little bit of a flywheel going there. And like the credit card, I think, is like a very small, like, exciting, like, maybe we'll onboard some extra people, but I don't think they're going to get a ton of additional revenue out of it. I think I see it more so from Westy's side of like, this is like a little bit of a carrot.
But can I ask something you mentioned, Danny? Would you guys say that Base has been more successful than Arbitrum?
100%.
Okay.
Yeah.
Are they trying to achieve the same things?
I mean, one thing Arbitrum is going for, it's a hyperliquid bridge. No, I'm kidding. But I'm just joking. But I mean, Base has been like meaningful. Yeah, like I think every single metric, on-chain trading volume, TVL, like Base, it has quickly rose to prominence as the number one L2 in that category. So I think, like, objectively speaking, you can say yes. But I think where Arbitrum has done well, I think Arbitrum has beat Optimism in terms of like growing. Like there's a couple, like Athena's a huge win for Arbitrum. If it's true, if some of the rumors are true that Robinhood is going to be announcing a Arbitrum based chain L2, like Arbitrum is potentially winning on the crypto native front and potentially winning on BD if they get Robinhood, because I think that's a huge win for them. Yeah. But yeah, I think Base has been a better L2 in terms of like overall on-chain activity lately.
But at their peaks, if you think about it, do you think that Base has been more successful than Arbitrum? Like, considering they both launched, they both had attention for X amount of months, they both had peak activity amongst the L2 spaces for X amount of months. Which one do you think has been more successful? Because to me, it's not as clear cut as saying Base is more successful. I think at some point you could even probably argue that, to me, Arbitrum DeFi was a lot more successful than Base DeFi was.
It depends what you're measuring. Like, what are you using to measure success? And you can answer it.
Active users.
That's a good one. I mean, we'll have to look at the Blockworks data dashboards for that one. If only we had quality active addresses, though, right, Westy? Wouldn't that be nice?
I don't have the data. I can pull up the data, and this is actually something I want to look into. I'm just like curious what you guys think, because to me, not going off of data, just going off of like how I can like innovation maybe, or like DeFi activity, or like what was launching on Arbitrum versus on Base. I can't really, like, there were a few months where maybe like 6 months where everything was happening on Arbitrum. Versus I don't really remember, like, to me Base was always kind of like a sidecar, and I feel like it still kind of is. Like, there's nothing like super innovative on Base. I'm just like, because I was
agree.
talking to this, I did a pod right before this, and we're talking about it, and Ali, who works at Volantis, anyway, his argument was that like we've kind of psyoped ourselves into saying Base is great, but it's just like a decent L2, but it never really did that well, right?
I think, given the fact that Base has Coinbase, the largest US-based exchange, behind it, and the fact that Arbitrum just has like a startup called Off-Chain Labs, its labs entity, and an Arbitrum, the foundation, an offshore Cayman entity behind it, and the fact that Arbitrum has done as well, it's gone toe to toe with Base, even during like its peak days. Even today, like they're pretty damn close in terms of economic activity, in terms of a bunch of on-chain metrics. Like, I mean, kudos to the Arbitrum ecosystem. Like, I also agree, a lot of DeFi innovation came out of Arbitrum, which was like a much more organic ecosystem than, I guess, what Base has been, just by nature of the fact that like Base is not as organic, just because it is a centralized exchange's L2 at the end of the day. So I think, given the lack of the difference in distribution, Arbitrum has like killed it for sure.
Yeah, I'm not arguing, by the way, David, it's not for you, but like, I'm not arguing that Base and Arbitrum are on the same level now. I think Base is clearly beating Arbitrum, but I think I think it might be a little overrated, if that makes sense. I feel like Arbitrum at its peak was probably doing just as well as Base was. Like I said, I need to look at the numbers. Currently, Base is winning. I need to look at the data from back in the day for Arbitrum, but at least market share wise, maybe not like raw numbers wise, because the entire ecosystem has grown a lot over the past year. And I know this seems kind of like a wishy-washy argument, but I was kind of thinking about it. And Base, like you said, David, they have the backing of the centralized exchanges, but it seems like they don't really have a token that has gone up for longer than a month. The like two biggest memes they had were one just straight up rugged, and then Miggles was like a whole weird thing where like they never listed it. Everything else just feels feddy, and then they just like completely failed at the content creation thing, at least so far. So I'm just like, I don't know.
I don't think there's been a lot of good memes out of Arbitrum either, so I don't know if that's like a great point.
No, but back then it wasn't about memes. Back then it was about DeFi, and Arbitrum had all of, like, Arbitrum was very, very relevant in terms of, primarily because of one product, which was GMX, and everybody building on top of GMX. So I'm not saying like it was the most unique ecosystem in the world and that it was fantastic. I'm just saying, like, comparatively, if you think about what was happening back then and think about what's been happening here, has Base been able to capture as much of the current narrative as Arbitrum was able to capture back then of that narrative back then? And
I think the state of the market is an important factor here, though, right? Like, if Base had launched at the same time as Arbitrum, we might be having a very different conversation, I think, because we were going through what maybe the community thought was the needful of, like, let's push all the stuff over to the L2s now. And so, like, there was Arbitrum, there was Optimism, some others were maybe starting to pop up, but like they were live, back during the beginning of that time where, we thought that ETH as a community or whatever thought that activity needed to move to these L2s. And so it went to them, the ones that were available and that were, notable at the time. And so today, like, there's 100 plus L2s now. So it's not surprising that maybe the market share isn't playing out the same way, but I don't know. I just don't know if it makes sense to compare them from
It
that.
doesn't. It doesn't make sense to compare them at all. I was thinking about it this morning. There's no data to back it up. I'm just like, in my mind, I'm wondering if we're over-indexing Base's success and saying, wow, it was the most successful L2 ever, when I don't know if I would say that.
Yeah, I think I think you totally should look to compare them. Like, I just have like I have like one page with like Base, Blockworks dashboard, and one with like the Arbitrum one, and just kind of like looking at them back and forth. Like, Base is objectively more successful from like application revenue and also rev. So if we're gonna judge it from like that point, and then I think like David's point as well of like just having, you know, Coinbase's blessing for it is huge, because like they already have massive reach and distribution. It's like kind of easy to maybe explain what it is. It's like, oh, it's a blockchain for Coinbase. It's like, how do you explain what Arbitrum is? Like, just kind of starting from there to anyone who, like, a lot of people know who Coinbase is. Not a lot of people know like Arbitrum unless you're already like in crypto. So yeah, it's like, of course it's not gonna be apples to apples, but you should compare the two, I think.
Also, like, we can also say like, oh, you know, it's Coinbase, the largest centralized exchange in America, is backed it. Like, of course they're going to succeed. But then look at Kraken, look at OKX, look at all these other L2s that are launched by very large and Bybit with Mantle. Like, no shade to any of these companies at all, but clearly it's not just simply, oh, run a centralized exchange and run an L2, like you'll be successful. Because I don't know about you guys, like I haven't bridged any of those L2s or any of those chains. Any of the major centralized exchange like L2s or chains outside of BNB, Binance Smart Chain. Like, have you guys bridged any of the other centralized exchange L2s?
I wouldn't say so.
But you've used Base, right?
I use Ink all the time.
To be honest with you, I can't remember the last time I transacted on Base. Which was kind of what this sparked. Like, what would I even do on Base? Swap between Miggles and ETH? Like,
one of the exchange chains I use is actually Chronos. I use Wolf Swap. Shout out Ian.
I've used Chronos before. Yep. Those were the days, man.
Deep liquidity on Wolf Swap over on Chronos.
Stop saying Wolf Swap. Please stop saying Wolf Swap.
Wolf
the
Swap
reason
mentioned.
you keep saying Wolf Swap is because I once swapped on Wolf Swap and I told him about it. And then he's like, Wolf Swap.
I'm not surprised.
Is it just the vibe though? But like, I'm trying to tease this out. Like, is it a vibe thing? Like, it's just like, I don't want to go to Base because Jesse Pollock comes on the timeline and says like, hey, coin it, brothers. Like, let's get out there and coin it. It feels like cringe. And so it's like, I'd rather go to ARB and anywhere else because it's not, you know, they're not being.
Okay, I'm not going on ARB. Let's not go that far. I'm not fucking going on Arbitrum. But
okay,
this is what Base feels like, if that makes sense to you. Like, using Base feels like this.
You know, I don't know if it's quite there, maybe comparatively. But I also want to Mog box take real quick of that. Like, Base has somehow been like overhyped. It's like, it's entirely relative to other L2s. And it's easily, if you look at history and the numbers, been the most successful by REV. Even given that, like, you compare it to Arbitrum, where Arbitrum's peak was like maybe a little less than Base's peak of any like quarter. But like, Arbitrum was rocking like $1 transaction fees at the time. And Base is rocking like less than a fraction of a penny. So like, they're getting much higher volume of transactions, so much higher usage. And so you look at the numbers in the past, clearly Base has been the most successful L2. But then you really need to be forward looking though. Like, really what these chains should be optimizing is future REV, as I like to say. Like, what are you doing so that down the line people are paying more fees? So you want like more sustainable sources, but you also want more shots on goal, as we like to say on 0xResearch. And right now it's pretty obvious Base, like the new experiments that are happening within the EVM right now are happening on Base. Like, you could argue Hyper EVM might become the place for that, but right now it's certainly Base. Of like all the new stuff that people are trying in the EVM land, it's happening on Base, and so they have the highest likelihood of future REV too. So to me, it's like underrated. They're doing fantastic.
Bach doesn't like a chain or a token unless they airdrop him a shit ton.
No, I don't care. If
Another
this-
thing is, they don't have a
this is
token.
one
There's no
idea.
incentive.
Wait. Let me speak with David, and then Westy, you can jump in and mog me as well. David, this is one difference
I'm joking.
that I need to make very clear. If tomorrow there's DEX that is much better than Hyperliquid, that lists more markets, has more liquidity, I will start using them, and I will bull posting them. Just like FYI. It's not about the airdrop. Yes, I'm happy about the airdrop, but I fundamentally think that it's the best claw product out there right now. So that's
before Hyperliquid, what was your favorite chain to interact on?
Solana.
Good take.
And before that, it was Ethereum.
I do think like maybe a piece of this, and I agree with Bach to an extent about the corporate angle, but I think part of this is like, who is their customer that they're targeting, and like I don't know that it is like the prosumer that's here today that's like deep in the weeds and is like Hyperliquid is the best clob that's available. I use Solana for my transactions because or I'm going on this chain or that chain because of XYZ. You know what I mean? I think they have a lot of customers and assets on their existing platform and on their exchange today, and like building up base and then integrating products that they can then like earn marginal additional revenues from is probably more of the goal there, and just like enticing people on their platform who might just be normies, like maybe some of the branding and the marketing would kind of suggest, and that they understand, getting them to use products. It's not getting like the Hyperliquid bulls on the timeline. I think.
Yeah, why would you want the people who spend money and make up most of the fees on your chain? You want 1,000x, bro. Let's get the normies on chain. I'm sorry, Danny. I'm being a dick, but I agree with that opinion. That's why I shouldn't have phrased it that way.
Yeah, I mean, the people spending the money today, but like if they're forward looking and they're looking at potential future customers, then like, I mean, the plan, like, the plan is simple. I mean, I feel like this is what Robinhood is doing. Going to do the exact same things, and this is like a big heap of conversation a few months ago. Gwart tweet, are these guys really going to come in, copy all the apps and infra, and then just like make more money on their customers and like say F you to DeFi, basically? I mean, not necessarily F you, but I think stuff like the Morpho partnership and things like that, like David mentioned earlier, those to me like speak to the strategy, and it's like they may not necessarily always be marketing to Boccaccio.
Yeah.
Well, they should. I'm very important.
Yeah, I mean, they know Boccaccio is married to WolfSwap, but like I think like one kind of interesting thing that I think Robinhood could have if they do end up launching their own chain, or like they start sending customer order flow to Arbitrum or Solana, or just any like EVM landscape, for that example. Like when you look at how many people are trading meme coins on like token meme coins, whatever, on Robinhood versus Coinbase, like Robinhood they don't report their volumes, but if you want to look at like the amount of raw tokens on exchanges by entity on Arkham, for like the last two tokens that were listed on Robinhood, there's over 21 times as many on Robinhood versus Coinbase, despite Coinbase listing those first. And granted, these tokens are Peanut the Squirrel, and what's the other one? Pengu. So like that's kind of an interesting metric, and like Robinhood might have liquidity requirements as well that we're not privy to. So like they have to keep X amount of tokens on there before they can even list, and so like they're making sure whatever market maker they're using for that, whether it's like Cumberland or Wintermute, I think are the two primary ones over there. That's pretty interesting. And so like, if we could get the volume numbers, I'd be really interested to see how many people are actually trading these things versus Coinbase volumes. Because I've looked at this metric before, like when they listed Pepe and other like kind of large, call them blue chip shitters, and they have way more. Yeah, I think that's a technical term now. They have like the inventory is just so much higher on Robinhood. It's really crazy.
Ian, what are your thoughts on Chill House?
I mean, I had a pretty strong thesis, but last night's events might have derailed that. So I'm going to take the weekend to chew it over, and I'll get back to you. But I think it's really important that we're keeping Chill House top of mind. I would love to see a Chill House pool launched on WolfSwap, I think that could be a major catalyst. And I'd love to see WolfSwap on Base. That'd be fantastic. I think that'd be really big, and that could bring Boccaccio over as a power user.
So actually, in my paid Discord last night, I called that Chill House would be store of value during crisis. So just wanted to point that out, that I saw this come in, this outperformance.
Let me pull up the chart.
Wait, I like legitimately have no idea what's going on with Chill House right now. Is it like up like 10x from the Iran or Israel attacks?
Well,
it's not a good amount.
The Khomeini called for a fatwa against Chill Guy. So, Chill House is up 10x.
I wanted to follow on to Ian's comment about volumes, and I do think it's interesting that like you mentioned Peanut. I don't know if you mentioned this stat. I don't think you did, but if the numbers here are real to some extent, like I mean, Peanut, for example, Hood's doing like 2x the volume that Binance is doing on Peanut Spot. Like to your point, it is interesting the amount of like some blue chip shitter volume relative to what other people might consider like tier 1 dexes. Obviously, you probably have to compare that to on-chain volumes as well, but the line on Chill House is clear. I do think it's interesting though, like their, I don't know, maybe relative dominance of some of these coins, like retail trading of them versus other centralized exchanges.
Okay.
Yeah, that's fair. Where did you see or can you guys see Robinhood volumes anywhere?
They show it in app.
In app, okay, but it's not on like any of the.
I don't think there's like a there. I mean, there
There's
might
not,
be
like,
some
an API
terminal out
for
there,
it.
but I don't think they have like an official API for it right now that you can pull.
Gotcha.
So, but you
That
can
would be
manually checking in app just to see. But yeah, they
Wesley,
did
that sounds like
100 million on Peanut last 24 hours.
Wesley, it sounds like a fire Blockworks dashboard. Robinhood crypto dashboard. Robinhood, if you're listening, hit us up. We'll build one for you.
One thing that's been pretty sad to see are the number of like beta plays that have popped up on Chill House of like people trying to like take the idea and spin it. Really, it's like you can't replicate the originality of Chill House. It's just too beautiful.
Chill House Patel.
Dude, ZK Goon won't stop talking about Chill House, unironically. That's not relevant. What is relevant is that I was wrong about Base, but I did get us to start talking about Chill House eventually, so it worked out. Danny, are we?
Yeah, we're getting a little goofy. So unless anybody has some last thoughts on Chill House or Chill House Patel or Chill House.
We got Robert Chang on here.
Robert Chang would be a good guest. I'd tune in.
Yeah, we can close it out. Before we start closing it out, though, permissionless 4 coming up Brooklyn like 2 weeks now. I don't know if you guys haven't bought tickets yet. Like you should buy your tickets, but the prices are going up, man. So it's a good entry here.
Can we pull up? If you're not gonna come to permissionless, like if you don't want to buy the ticket, you can come to the 0xResearch event. There's a Luma in the Telegram chat. I might put it in. We don't do show notes on live streams. So if you can figure it out and sign up for it, and you can message me on Twitter if you want to come, and I can approve you, and it'll be fun. Don't come if you're like a weird dude, but if you're a regular guy or girl, you can come.
You're a chill guy.
That's a good pitch.
Yeah, if you're a chill guy.
Yeah. If you're just like a good dude.
Chill House Bulls. Chill House Bulls are welcome. Bears, obviously, like do not show up.
Do not show up.
Yeah, there's a link in the YouTube description, so I don't know. You can go over there and find it, but it's not on the Twitter, so good luck.
Yeah. Before we end it, actually, can we do a whip round of what everybody's doing? No, not money. Of what everybody's doing on chain.
Yeah, what are you doing on chain? Start it off, Bach.
Wolf swap. No, I've what have I been doing on chain? I've been doing hyper EVM stuff. I'm gonna check out Volantis today because I talked to Ali who works there. They have a stake type hype AMM. Very interesting. But they built stuff on the Hyper EVM, so I want to check that out. And apart from that, I'm kind of done with shitters after I bought Aura and then I sold it, and then it did a 200x in 7 minutes. So I don't think I might kill myself, to be honest with you.
Never kill yourself.
I'm considering it. So that's really it. There isn't that much to do. I want to try out Zex. Is that what it's called? No, Bullet. I think it's only on testnet, and they have like 12 markets. So I don't know what I'm gonna do with that. And also, Kevin today mentioned to check out intern. He mentioned to check out a few apps on one, and I wrote them down. I'm gonna check them out. Kuru I've already played around with. It's also on testnet, so there's not much to do. But Kizzy's pretty cool. So maybe I'll see what they've kept building on there. But that's really it. There's nothing like money that I want to put money in because there's nothing really happening. If you've noticed, we've talked about this, but so that's why I'm kind of trying to source ideas.
I like it. I do think Kizzy's cool. I like the shout out there. I think it's interesting. I want to see that on mainnet. I want to put actual dollars in. I mean, we kind of talked about that too with him saying like, you know, it's kind of for funsies right now. So I would like to see it for realsies. If you feel me, I want to put some money into that and gamble on influencers. But I would say like one of the few things I've been doing is I actually been playing with the Pump on mobile app, mostly because I'm surprised that like they're not more vocal about what they're shipping, given like the other kind of, you know, rumors circulating around the token sale and stuff like that. I figured they'd be maybe more out and about with it, but you know, I guess it's in some of the updates are in beta, but they have like a news tab. They've got, I don't know, they've got different like better token curation than they've ever had in the past, like on the website. They've got the live streams like incorporated in the mobile app, and you can have like group chats and stuff in there. So I don't know. I was surprised I tweeted about this, but like they've been kind of like building out this like broader like social and like news and token and discovery kind of platform. So I've been messing around with it. I think it's cool. The little news clippets are interesting. Like when Aura went up 200x in one candle and I missed it because I also sold at the bottom, they dropped a little news piece on it. Like, you know, people are speculating like, why is it up, et cetera, et cetera. It's interesting. I don't know. Check it out.
Very good. Westy, Ian, David.
What am I doing on
Yeah.
chain? Trading silly tokens, particularly Chill House on Wolf Swap as a store of value during crisis in the Middle East.
This is my favorite tweet. I'm gonna pull it up.
That's brave. That's bold.
Wait, it's actually not PC. I can't pull it up. That's a good one, Westy. I assume you're not doing much on chain, which is why like you're probably just doing meme coins on Sol, right?
Yeah, I've just been trading like Launch Coin and maybe a couple Believe coins here and there. But to be honest, yeah, not that much.
Are you using any fun apps to trade, or is it just like Phantom Wallet, homie?
I've been using Axiom just in the off chance that there's an airdrop. Good UX.
Good.
It's good. You approve?
Just trying to make the conversation flow. It's my job.
I approve. Ian, what are you doing? You're next.
Yeah, more or less the same. But I just had a product idea. So if anyone out there is something like a wired answer fork for Chill House, like Chill House chain, Chill House chain, it could be a good one. So if you're a serious builder, that's what you should do. But yeah, I'm definitely excited for like Monad testnet too. I think that'll be cool. So I'm happy that you had Kevin on today. Gonna check out some of those apps as well. But yeah, there's not too many other like primitives. I'm still waiting for just like kind of basic crypto games, like some fun stuff that like isn't as PvP. But yeah, something new would be great.
You got some good naming opportunities like Chill Dancer, Firehouse. Those kind of slap. I can't lie. I would use Firehouse.
All right, Danny, head of marketing.
We'll ship it. All right, David. What have you been doing on chain? I know you've been doing things off chain.
Yeah. So one thing, it's not directly on chain, but Chakra Labs, they're kind of like a grass competitor. It's founded by 0xResearch, who's like one of the ex-founding engineers of Artemis. He launched like a data scraping or like a data AI company. They launched this Google Chrome extension called Scout, I believe. Highly recommend everyone download that. And it's pretty much starting to scrape different web pages you join. There's like a points system going on. So that's one thing that, again, it's not directly on chain, but I'm sure that there's going to be some kind of on chain product eventually. So just been messing around with that. And then really the only thing I'm doing on chain right now outside of buying Camino right now. I'm pretty long Camino. And I wrote I guess my high level thesis the other day on Twitter. I'm in the world chain trenches. So yeah, what's up, Puck?
Well, no, shill your 300K market cap shitter.
Yeah, it's actually, it went down to $6,000 market cap. So, but
what? You don't stop. There's 3,000 people on here, but do not shill a 6K.
I'm not shilling it. I'm not even going to bring up the ticker. But Puff is like this. It's like probably the largest launchpad on World Chain, which isn't saying much because there really isn't a lot of launchpads yet, and World Chain is still a pretty nascent ecosystem. But I am just buying some shitters on there. I do think World Chain is probably the most underlooked or underrated future ecosystem that everyone's kind of short on. And I'm not going to bet against Sam Altman. I'm not going to bet against World Chain. So I've been kind of messing around with Puff Launchpad, and I'm actually been having some conversations with the team on that. They seem like relatively crack team. And outside of that, I'm really not doing anything. Just buying some tokens I think are undervalued.
That's good.
Buck, you were going to ask me something, and then was it tied to Camino or was it something else?
No, I don't want to ask you anything.
Okay.
He's tapped out. I think we're all tapped out for today. It was good, gentlemen. Thank you all for coming on. Yes, Bach?
Let's have a great weekend. Everybody, have a great weekend.
Let's have a great weekend. Everyone have a chill house vibe weekend. Get out there. Maybe touch some grass. I don't know. That would be cool. Maybe the Middle East can touch some grass as well. That might be a nice idea over there. Other than touching buttons, we should keep them away from the buttons this weekend. But yeah, we'll call it there. Great topics. Great to have everyone on today.
Yeah, I need the Middle East to cheat.
Never kill yourself.
Chill out.
Every time. Just chill house.
Yeah. Are we doing the...
Yeah, you want to do the fun part? Let's do the fun part.
Yeah, but can you put the Sydney Sweeney one on where she's crying because I'm speaking in the background? Do you know?
Do you have the Sydney Sweeney one?
Yeah, but I don't have it uploaded.
Oh, I'm still... Here we are.
There we go. Guys, next stream, we're going to put a picture in that hole. So if you want your picture in the hole, like and subscribe and comment and say chill house, and we'll put you in the little hole, and you can say whatever you want, man. You can chill. This is some chill house music as well. So movie.
We're going to put, somebody's going in the hole for sure, but it might be Bach. I don't know.
You know the buttons aren't clickable?
Yeah, it works on YouTube though. I think. I don't know. That's a producer thing, man. You're talking to the wrong guy. We can yell at the producer. Yeah, yell at the producer. We'll figure it out. Thanks for watching today, guys. We'll be back next week. Hopefully it's a little more chill. And maybe some more fun things to do on chain pop up for us. You know. Ping us with your favorite app that we need to try out. If we didn't talk about it. We will. See you next time.